I don't think investors truly understand that when we do go into a recession, there's not going to be that helping hand to get us out this time. There just can't be. Now, when we get into a very bad recession, I think that's when that becomes a bigger question. Will the Fed eventually come to the rescue? Right now is giving me a general target of around 9,000 and a bottom maybe in May or June of 2023.
In today's video, Chief Market Strategist of InTheMoneyStocks.com Gareth Soloway tells us all about his latest analysis of the charts as well as his predictions and price targets for Bitcoin. According to Soloway, Bitcoin may face a lot of uncertainties in the near term as a result of the ongoing global economic declines, and we can still possibly see the Bitcoin price drop to 12K even lower, before putting it at a bottom. Soloway shares his opinion regarding high inflation rates, the stock market, the crypto market, and the Fed. Before listening to him, please ensure to smash the like button and subscribe to the channel.
First, let's start by both your takes on inflation. Does this just mean the first wave is over? We're not out of the clear yet? Is it time to rejoice? How do you both see it? Gareth?
Yeah, I do think overall inflation's coming down, but my expectation is that inflation will remain sticky for multiple years, probably north of 2%, right? So even north of 3%, I could see it. And eventually, I think the Fed is going to have a moving target on when they'll stimulate. It probably won't be below or at 2%. They'll probably be forced to when we're nearing around that 3% level. But again, there's no doubt in my mind that inflation is coming down. It's just a matter of, will it return to that transitory talk back then when it was 2% or less. And I really do not see that for many, many years. I think it's going to put the Fed in a very tough position where they're not going to be able to lower rates for quite a while. And it's going to put a lot of hurt on the U.S. economy. I mean, I don't necessarily know if we're right in recession right now. I think there's still a fair amount of consumer spending. The jobs numbers, again, lagging indicator, but we're seeing the layoffs in these Fortune 500 companies almost every day, 10,000, 20,000 people. So it's coming. You know, to me, it's like you see that huge tsunami wave out in the distance and you know it's coming. And I do think that, yeah, we'll be in a recession in 2023. It's just a matter of, is it the first half or the second half? But to me, there's no way, especially when you think about how the Fed got caught off guard again, saying it was transitory and it's not. Now they've overcompensated to the other side in terms of hiking rates. And I really do believe that they've overstepped again in this direction. But the problem is, based on what happened in the 70s, they're going to be very reluctant to back off and start cutting rates. And so what they're going to do is most likely stay the course, say they have to stay the course. And even when we get in a recession, they're not going to look to cut rates. They obviously won't hike anymore, but they won't be cutting rates for a significant amount of time. And what it's going to do is it's going to cause a spin out on the opposite side then. And it really feels like, I mean, I don't know if Michael gets this sense, but it seems like ever since the Fed's gotten involved in the economy more and more, there's always these huge bubbles and then these huge opposite reactions, right? And it kind of makes sense, right? The universe is supposed to come back to zero-sum game. And so when you have these monster bubbles, you have to have this reactionary period of negative growth to kind of compensate and bring us back to that level. But again, I'm not looking forward to those next few years. I think it's going to be tough. I think it's going to be a traders and investors market, but we're going to have to get through it. I mean, I think that's the kicker is that the Fed to some extent has been involved for a long, long period of time. It really got accentuated in 2009, right? I mean, that was where quantitative easing to a major extent became part of everyday life. And investors have gotten to the point where every time, I mean, it's like a kid, right? A kid falls and they expect their parents to catch them. And I think that's what the market and investors are at. And I do think that that's going to be a major shock. I mean, you're looking at the S&P only down, 15% now from the all-time highs, or maybe not even. And I don't think investors truly understand that when we do go into a recession, there's not going to be that helping hand to get us out this time. There just can't be. Now, when we get into a very bad recession, I think that's when that becomes a bigger question. Will the Fed eventually come to the rescue? I think we're in for a long-term recession. I mean, like a lost decade, like Michael was saying. And I think that's, you can see what's so scary. And again, you know, I've gone over these charts in the past, but if you look at the chart from 1915 to 1930, and we know what happened in the 30s, it's almost identical from the chart 2000 to where we currently are just before the Great Depression. And I'm not calling for a Great Depression. I don't want to be one of those people that goes out that far out. But I think we have to be prepared for something that we haven't seen in a really long time. I still, I was talking to someone yesterday, and this is more in the crypto market, but they were still talking about mortgaging their house to buy crypto. And that just right there tells me crypto's not bottoming yet. You see this, and I still think that investors are so used to, think about this. We had the COVID collapse in March of 2020, and within a couple months, we were back to all-time highs. So even when investors say, oh, the stock market's down 20% or 25%, in their minds, it's like, oh, don't worry, a couple, 2, 3, 4 months, it'll be back to these all-time highs. And I think that that's the mentality that the Fed has now created, this mentality like, oh, I can't lose, I might be down, but it's a paper loss. And you don't get true bottoms until people fully give up and just say, never coming back.
Please.
Sorry, I was just going to add one more thing. And one of the things that I think is amazingly fascinating in terms of the psychology of investors, after 2009, people were so burned that the majority of retail investors did not come back until like 2020. And notice how that was the beginning of the end of the bull market. And we talk about that. I still remember in like 2017 and 18, the biggest kind of headlines were like, the retail investor is still not involved in this market. But finally they came back. But again, that was the top. That's where they get burned. And you need to go through a period where now they're going to be gone again for a long period of time. We're probably getting close to a technical bounce. But the way I look at it is when you have a big fall off a high, that high now is the peak that I trade against. So until it takes out that peak, that is the high pivot on the dollar. So I'd be in a camp that I look for a kind of a retrace, and then I probably look to short the dollar again, or at least buy things that will go up in a down dollar environment. And by the way, a lot of people assume that the stock market will continue to rally in a weak dollar environment. There will be a turning point where the weak dollar actually is a very big negative for the stock market.
Do we see a melt up in 2023? And I also just want to add that Michael says melt up. Again, it doesn't necessarily mean a bullish scenario, but do we see a melt up?
For me, I'm in the camp that we'll see from wherever we close 2022, we'll see at least 25% down in 2023. So I'm in a very bearish stance. I think, again, 2023 should be the year where we finally hit that recession officially, and where the stock market and investors finally realize that the Fed cannot bail us out like they did in 2018, like they did in March of 2020.
A quick point on the housing there. How come the rental space hasn't come down?
Yeah, it's interesting, but it also kind of speaks to how much, probably demand. Think about how many people got priced out of housing, and then how many people are even more priced out now with, how do you get a 30-year yield with 7% interest rate? So I think it just means that you can either be homeless, or you got to rent, or you got to buy. And right now, rental is still the cheapest option because of interest rates. Like a weatherman, we're always getting new information. And a good investor and trader, first of all, doesn't fall in love with any investment. That's the kiss of death, is when you do that. People have fallen in love with Tesla, with Elon Musk. And then again, you look at where that stock is comparatively, and I think it's even negative again today in a neutral to positive market. But the key is, every day we get a new piece of the puzzle, and it's up to us to take that objectively and see how it fits into our overall thesis. And if our thesis changes, then we have to change. Otherwise, you get left behind and you end up losing money.
What's your forecast for Bitcoin as we start 2023?
And the thing is, when you live through periods of these .com bubbles, these other bubbles, you start to recognize the psychological, the signs of bubbles, and it helps make those calls. And a lot of people in the crypto space, this is their first time ever investing, right? So they just were going to be oblivious and kind of get caught up in the hype. But going into 2023, I still think there's more downside. Doesn't mean we can't have a small bounce, but I still think that we probably don't bottom out until May or June of 2023. I've really been likening the FTX blow up to what Lehman Brothers did to the stock market. And I noticed that when that happened, it took about 6 months for the stock market to bottom, and it took another 45% dip in the stock market, in the S&P 500. So I kind of mapped that out, and it gives me a general roadmap. And like we both said here, that's subject to change, but that right now is giving me a general target of around 9,000 and a bottom maybe in May or June of 2023. And I do think that we will get regulation probably in the first half of 2023. It's going to be the best thing that ever happened to crypto over the long term, because transparency will mean that big money will finally start to take a serious look at cryptocurrencies like Bitcoin. And that's the only way Bitcoin's going to see 100K or beyond, is if you get big money investing.
Gareth, did you say a bottom in May of 2023? Did I hear that correctly?
Correct. Yeah, that's what I'm looking at right now, is a bottom right around that May, June of 2023.
And then the pain goes away for Bitcoin investors?
No. I mean, just like any market, there'll be a lot of period of chop, a lot of period of testing people's patience where people are just unsure. But I think the 10,000 break is going to be very important psychologically to stop a lot of people out and kind of make them throw in the towel, which is very needed to see a bottom in crypto. And again, you just haven't seen, in all fairness, as much as Bitcoin's fallen, you have not seen the panic out there in Bitcoin or in crypto that shows you a bottom's here yet.
Any outliers you could see as we head into next year? Things that you're watching and looking at and thinking, this could explode?
For me, it's starting to look outside of the U.S. I still think the U.S. is going to have a lot of trouble, but I think there are countries out there that have been underinvested by most institutions for many, many years. And I think they're going to be the recipients of money flow. So, I'm definitely focused in on South American economies and their markets, Brazil, the EWZ. I think China is definitely interesting, though very risky. If we are seeing the end of zero COVID policy and maybe a warming up in relations, you have some stocks over there that are just incredibly discounted, even after their recent really big run. So I think that's where I'm kind of focused in on, plus gold miners, being defensive, and then being more of a trader in 2023.